Sorry, the meeting has disconnected. Sorry. Yeah, let's move on. So motor vehicles, 150,000, you less 65,000, you get 85,000. Then let's go to the next asset, furniture and fittings. The cost is 40,000. And there was an accumulated depreciation of 2,000, which is here. And you have also calculated another 2,000 for furniture and fittings. So accumulated depreciation under furniture and fittings is going to be 4,000. So you have cost 40,000. You have accumulated depreciation of 4,000. So how much is going to be your net book value for furniture and fittings?
36,000.
36,000. Fantastic. Then go to premises. The cost of premises is 150,000. There was an accumulated depreciation of 30,000, and you yourself, you have calculated another 12,000. So 30,000 plus 12,000. How much are you getting? $30 plus 12, how much are you getting?
42,000.
42,000, fantastic. So subtract the 42,000 from the 150,000. How much are you getting? $108,000. So now total the net values of your fixed assets and give me the final answer.
$229,000.
229,000. Fantastic. So this is how your notes should look like, or this is how your presentation is going to look like. So this is what I just took you through right now. So note 1, turnover. Note 2, cost of sales. Note 3, we did other incomes. Note 4, we did administrative, selling and distribution expenses. And then note 5, we did our fixed assets schedule. Now let's look at the presentation itself. So we are going to solve the question itself now. So you prepare your final account, your trading profit and loss account. You put it there. Edaho Clear Limited. That's the question, or that's the name of the company. Edaho Clear Limited. Then you underline. First line, Edaho Clear Limited. Then you underline. Then under it, you put the income statement for the year ended 31st December 2018. They said you do it for 2018. So income statements for the year ended 31st December 2018. Then you are going to have 3 separate columns or 4 separate columns. And the columns is just going to look like this. You have turnover, you have notes, and then 2 Ghana cedi symbol side. So just do it just like that. So you have the notes column, then you have 2 Ghana cedis symbol sign, where you can put the debit transactions and where you put your credit transactions. So first item that appears on your trading profit and loss or your income statement is turnover. You write turnover. And under the notes, you put 1 because turnover was the first workings you did. So the note here is applying to the workings you did.
The format should be how?
You said?
The format should be done like how?
I'm coming. Let me give you an overview of what I'm trying to talk about. So what I'm saying is that when you come here, you have a Daho Clear Limited. Then you have income statements on and on and on and on like that.
Okay, okay, yeah.
Then you come here. Then you have notes. Then you have your Ghana CD.
Okay.
Then you have your Ghana CD, just like this.
Okay.
Like this. So if I come here, and then I say turnover. Turnover is my note 1. So I put 1 here. Then I put the figure I had for turnover to be 142,000.
Oh, okay.
You understand? So this is how your presentation is going to look like. Are you getting it? So anybody that takes your work and sees turnover and see 1 here, you are telling the person that if you want to know the breakdown of how I came by this 142,000, go and look at my workings 1.
Fantastic.
So if you put here 142,000 and they pick your marking script or they pick your answer booklet, and there is no workings to where this 142,000 came from, it's wrong. So you don't chew and pour figures. You do proper workings to show how you came about that particular figures over there. So this is how you are going to do the presentation as we go forward. There is a less cost of sales. Your cost of sales is note 2. So you less your note 2 cost of sales from the sales. How much are you getting as gross profits? $142,000 minus 55,000. You are lessing cost of sales. You are not adding cost of sales. So I don't expect you to do 19.
87,000.
87,000. 87,000. Fantastic. So 87,000. Then you less administrative expenses. You less administrative expenses. And your administrative expenses can be seen in your note 4. The administrative expenses can be seen in your note 4. Is that correct?
Yeah.
When you less your administrative expenses, how much are you getting? $19250. Fantastic. And that 19250 is called operating profits. Operating profits. So if you less administrative, selling and distribution expenses from gross profit, you get operating profits. Take note. Then you add other incomes. Other incomes too, you got it from your notes. You know which note it was from, whether note 5 or note 4. You put it there accordingly. So other incomes, I remember you had somewhere around 12,000. So you put it there. When you add other incomes, how much are you getting? How much are you getting?
$31,250.
31,250.
And that is what you call net profit before tax. Your 31,250 is called net profit before tax. Then you tax. So you put there taxation or tax. When you go to the notes, they said you are to provide for corporation tax of 40%. Provide for corporation tax for 40%. So you strike 40% on the 31,250. How much are you getting?
12,500.
12,500. So you less your 12,500 from the 31,250. How much are you getting?
18,750.
18,750. And that is what we call
180.
good. That is what we call net profits after tax. Net profits after tax. Net profits after tax. So this is how your income statement is going to look like. So your income statement will look like this when you are done. So this is how I want you to do your presentation, or this is how your presentation is going to look like when you do the writing. Now, the next stage we look at, or the next account to prepare when it comes to publication for companies, is the profit distribution account. And that account is called your income surplus account. After we made the profit, what are we going to do with these profits? Is to share and take strategic decisions on these profits. Bear in mind, people have invested their money in the company by way of shares, and these people have interest in the company. So in some books, you see they call it statement of changes in equity. Statement of changes in equity. So when you go and see statement of changes in equity, don't be scared. Don't think it is a different thing, it's the same thing. The income surplus account. So the next account you are preparing, or the next statement you are preparing, is income surplus account for the year ended 31st December 2016. So put it down. Then we go on. Income surplus account for the year ended 31st December 2016. Then the very 2018, sorry, I think the statement, have to change it. The very first information that will appear on your income surplus account is income surplus brought forward. Income surplus brought forward, 34,000. So you see it over here. So any surpluses from last year to this year will be put here or will be stated over there. Then you add this year's profit. So you add net profit after tax. Net profit after tax is 12,500. Net profit after tax is 12,500.
So this is 18750.
Oh, sorry, 18750. Sorry for the correction. 18750. Yeah. So add the two. How much are you getting?
And so that one too, how is the format done?
Oh, that one is a normal 2 column. It's a normal 2 column. No notes attached to it. Okay.
Oh, okay.
You can still bring the notes. The notes is just for working. So any workings you do and you want us to see, I get in it. It must be shown in the notes. Hello. It must be shown in the note as such. Then once you get this total, how much is the total?
$52750.
Yes, dear. I need pizza. I need pizza. Okay, all right. Okay. And call them to do the smaller one for me. Yeah, for my kids in the house.
You also need a burger.
Okay. Yes. All right, thank you. Yeah, sorry for the interruption. You said you had what total? How much?
It's
How much?
52750.
527.
52750.
Okay, all right, that's it.
50.
Yes. Then you look at transfers and dividends. So go to the footnotes. That note 6.
A question.
Yes, ask a question.
So please, the income statement.
Yes.
Can it also be, but it can also be a note because it's not a requirement. We just need the balance to prepare the balance sheet.
You mean the income statement?
The income surplus, sorry.
No. The income surplus is not a note account at all. It's part of the statements you are presenting for publication.
Okay.
Yes. When we are done, I will send you.
So thank you.
When we are done, you can go onto the net, okay? Then you find out or you download final account or publish account for companies here in Ghana. You can see that when we talk about this statement or final account, we are talking about the income statement, the balance sheet, and then the income surplus account, and then the cash flow statement. These 4 statements are the statements you present to the board or are the statements you present to the owners of the company. Okay.
Okay, sir.
All right. So they said the directors have decided to transfer 10 million to stated capital Directors have decided to transfer 10 million to stated capital. And so therefore, you write there, transfer to stated capital, 10,000 in the first column. Transfer to stated capital, 10,000 in the first column. Then sometimes you can have transfer to stated capital, you can have transfer to general reserve, you can have transfer to capital surplus, you can have transfer to revaluation reserve or revaluation surplus. All transfers they are doing out of the profit they make must appear over here. After you've gotten your transfers, you are now coming to look at your dividends you have paid and dividends you are supposed to pay. Now, let's go to the question. Let's go to the question. We are being told along the line, when I was reading, that an interim dividend has been paid. Sorry, let me pick this call, then we continue. Okay, let's go on. So along the line, they were saying they paid an interim dividend. Where is he? Where is he? Interim dividend. Aha. Dividend on preference shares. Have you seen it?
Last but
So
three.
any dividend you see in the trial balance, any dividend they paid you see in the trial balance is called interim dividend. Interim dividend. And whatever the directors have agreed to pay at the end of the year is what we call the final dividend. Whatever has been agreed to be paid at the end of the year is what we call the final dividend. And so therefore, if the dividend is yet to be paid, it is called proposed dividend. A dividend that is yet to be paid is called proposed dividend. So after your transfers, you put the interim dividend, preference share, 4,000, then you put it over there. Interim dividend, preference share, 4,000, you put it over there. But how much are preference shareholders supposed to get? You know, as a preference shareholder, one of the characteristics is that they know how much they are supposed to get in terms of dividend at the time they are purchasing their shares. They said the shares they are buying, each share, they are getting 50,000 or 50 Ghana cedis on each share. So multiply 50 by 200,000 and see how much you are getting. $50 by 200,000, how much are you getting?
$1 million.
10 million. 10 million. 10 million. So in a nutshell, 10,000. So these people are supposed to get 10 million as dividend paid to them. But how much did we pay to them? We paid them 4,000. So what it means here is that there is an outstanding of 6,000. Such information they will not tell you in the question because you have every information here you need to determine the dividend. So once you have the information here you need to determine the dividend, you are in a position to know the amount that is outstanding once you have been given the amount that is paid. Is that correct? So you write there final dividend or proposed dividend 6,000. Write there final dividend.
Sir, please go over again.
I'm saying that preference shareholders bought shares that they are supposed to get a dividend of 50,000 on each share. From our calculation, we came to the conclusion that the total dividend we are supposed to pay them is 10 million. More or less 10,000 because we say we are knocking off 3 zeros. So if we are supposed to pay them 10,000 as dividend and we have paid them 4,000, how much is left for us to pay? 6,000. So in your income surplus, you are going to have interim dividend paid for preference shares 4,000, and you are also going to have final dividend for preference shares outstanding 6,000, or proposed dividend for preference share 6,000. So you are going to have it there just like that. So I want you to do that, then we go and look for that of the ordinary shareholders. Now, let's go to ordinary shareholders. In the footnotes, they said the directors have decided to pay a dividend of 80 Ghana cedis per share on ordinary share. So the total amount of ordinary shares we have, each share is attracting a dividend of 80 Ghana cedis. So what you need to do is to go and multiply the 80 Ghana cedis by the number of ordinary shares we have. We have 350,000 ordinary shares. So multiply it by 80,000, 80 Ghana cedis, and see how much you are getting.
280 million.
280 million. And you put it there. Proposed dividend.
28 million.
How much?
28 million.
28 million. So you put it there, 28,000.
Yes, 28.
28 million. So in your income surplus, you are going to have transfer to stated capital 10,000. You are going to have interim dividend paid on preference share 4,000. You are going to have final dividend or proposed dividend on preference share to be 6,000. You are going to have also proposed dividend on ordinary share to be 28,000. Total all and see how much you are getting.
$38 million.
You have left one, transfer to stated capital.
$48.
So the total
8 million.
is 48 million. So you are now
48,000.
subtracting the 48,000 from the 52,750. So 52,750 minus 48,000. $52,750 minus 48,000. How much I get?
750.
4,650,000.
4750. And that is
Yes.
what we call your retained earnings. Your retained earnings. Your retained earnings. Retained earnings. Any question? So this is how your presentation will look like if you have done the correct thing. This is how your income surplus account is going to look like. So this is what you call your retained earnings, 4750. Final thing we have to look at is the preparation of the balance sheet or our statement of financial position as at December 31st, 2018. I'll exit the meeting for 3 minutes and I'll come back and we'll look at the balance sheet.
This much.